Hey there, everybody. This is Kaylee McMahon. Let me fix this little thing. It's now fall, so we have dark outsides in the evenings. So I will try my very best to make this to where you can actually see me and participate. So I'm excited for this is class number 2 of our sessions where we're going through business strategy and multifamily. So what we're going to be going through tonight is a little bit about scaling. 1, 2, we're going to be going through systems, processes, and what essentially does it take to scale? What tools do you need? What tech stack do you need? And then other templates that we're going to help you to be able to figure out how to know where to start, right? So let's go ahead and go through what we have created in the format of starting with just the underlying where to start. So what I mean by where to start is, so if you were starting a business and you have the idea in mind that you want a business that runs itself, self-running business, or in the book that is Rich Dad, Poor Dad, it talks about the ESBI quadrant, and a B in the quadrant is a B-type business or self-running business. So E is employee, S is self-employed, B-type business or self-running business, and I is investor. So those are the 4 quadrant categories that we can be in, I guess, when we are looking to make money in the world. So knowing that, right, the third quadrant of that is a scaled quadrant. And so that was always my goal to get to, was where essentially the business runs itself, right? So I'm going to go over a couple of tips and a couple of things that we actually utilize in our decision-making process, how we got started figuring out how scaling even happens, because it's a misnomer. I mean, a long time ago, I thought, oh yeah, scaling just essentially means that you do something like a transaction and you do it not 1 time a month, but you have a large enough team that you do it 20 times a month. So your income goes up, everything that you're doing expands, right? But it doesn't mean that it runs itself without you. So the only way to get a business to run itself without your presence, or at least with you not in the business daily, you might be checking on it once a week. You might be, let's just leave it at that, right? Whatever your cadence of follow-up is, you want to set it up to where there are clear systems and processes in place. And so those that are in your team or coming in to operate your business, whatever that means to you, that they have a full set of instructions. They also know what their key performance indicators are. So what that means is they understand when they do. So they understand, number 1, what is their role? Number 2, what is the system, the standard operating procedure look like? And then the KPI, or their key performance indicator, is their measure of their engagement of their role and what success looks like. So meaning, if your job was to make 10 widgets a day and you made 20 widgets a day, and if you got to 11 widgets a day, then you got a 1% bonus. So if your key performance indicator was 10 widgets a day and you made 20 widgets a day and your bonus was on 11, then that means that for each, depending on your agreement, of course, that for each additional percent above where you were supposed to hit, there either will be a bonusable event, some kind of reward, potential probably for promotion, for example, but all that needs to be defined. So point is when someone comes on board, they need to know where to go, where to find things, who does what, and let's just dive in. So the first thing I want to talk about before I swap the screen and show you all these cool tools, and again, these tools I'm going to be adding into the portal for you. Again, these are things that we've built or that we have been involved in, like an accelerator, for example, and learned about these tools. So one thing that you're going to really start with, all right, so if you're going to spend all the effort and time to scale a business, especially if you're scaling from ground up, okay, from ground zero, it is a lot of work. Startups suck. I'm sorry. And then also, startups not only suck, but they also suck cash. So they're cash suckers, meaning that you're going to need a lot of cash infusion to basically figure out what works and what doesn't. However, there's some tips and tricks that I'm going to go through that tell you how to do some testing, for example, that help you to, instead of cast a wide net of what works, what promotions work, how do we get traffic, how do we create leads, instead of testing all over the place all the time. If you're on a finite budget when you're starting, you need to find a lean method or a bullseye method to be able to figure out what works for you, okay? So we're going to go through that as well. I have a little checklist of a couple things I want to go over, and there's a tool associated with each of these things I'm going to go over. First thing I want to go over is, like I was mentioning, if you're going to spend the time to actually scale a business, right, you're going to need to understand that there is something bigger than you that's being created. because there's going to be a lot of ups and downs on the journey. It's a long journey. I would say it probably takes a good 10 years to truly scale a business, unless you have a unicorn business, which usually is something that's like in technology. So if you're not in that industry, kind of like let that go. But point is when that happens, typically a venture capital company will come in and fund, knowing that they can then take the immense amount of traction that this company has created and then put the professionals that cost a lot of money in place that will do your marketing, advertising, your systems. They'll have your people, your COO, your CFO. So that's another thing I'm going to cover in here is roles. And when I do that, I'm going to show you a chart of our team. And there's obviously missing people in there, which are really important as well. So it's also right butts, right seat to understand once you do figure out, what you're doing, how you're doing it, then it's who's going to do it, and making sure that you have the right people in the right spot. So mission, vision, values are really important to have whenever you are running a business. Because like I said, it needs to be larger than you to continue to keep you motivated long-term to make a difference. So we have a company we've seen recently that they essentially help children, little small children, be able to grow more lung cells who get certain types of diseases, right? And so then they're able to beat the disease because they could create their own cells and essentially continue to live and breathe. So that's an example of a business that has a mission to save children's lives. And it doesn't have to be that profound in your business, right? It could be a monetary goal. It could be a growth goal. It could be changing something that is a typical industry average or norm, and then you're doing it, or whatever, it is that you want to achieve. Now, the way that I would suggest you to really get clear on your mission, vision, and values would be to go and read a book that is by Gazelles called Scaling Up. There's also an original version of this book, but their book really makes it very clear about the templates that you want to use. And we're going to go through some of those because those would be like I have them on my desktop, but review and long-term goals. So when you're clear on what your mission, vision, values are, you want to visualize them all the time. So I'm going to open up this document and I will share. And so this is not going to be perfect, but again, like I mentioned, this is all going to be in the portal for you to see these examples. And I want to let you know that this tool I'm going to show you is actually available through Gazelle's website. But the book is great because, again, it helps you to figure out how am I going to live a mission, vision, values, how to turn that into words, then turn that into numbers, then how to work backwards to achieve those goals. Okay, so these are growth tools. And so right now what you're going to see is, like I said, it's really messy because they don't have the templates that you'll download on their website are not PDF filled. So I print them out and I scribble on them. So essentially, when you go into business, there are certain seats, right? People, right? So this chart gives you what the typical roles look like in a company. However, depending on what your goals are and depending on what industry you're in, these could mean absolutely nothing to you. So for example, we didn't need a controller because we had a CFO. We didn't need a treasurer because we had a CFO. So it just depends on what your business is. That CFO was also over our fund. So she had special skills that were related to real estate funds, whereas some other businesses don't need that at all, right? Okay, so when talking about people, you also need to understand the process accountability. So this is going to go into later on. So when I talk about a standard operating procedure, I'll cover that later and how to create these and whatnot. But essentially, this chart helps you to identify 4 to 9 processes that drive your business. So I had to, throughout a week, take a sticky note and look at every single thing that we were doing that was a core process that we were doing over and over and over again, right? For example, we were doing investor relations. We were taking 1031 exchanges. This is just in our multifamily business. Every other business is different, but this is just an example. But again, I had to track my my activity through a couple of weeks to see what it is we actually do repetitively, because then you can create a process out of it. And you have to niche down to even little things, which is okay. So then again, for us, fundraising was another thing. We also wanted to acquire deals. So once you get to the point where you have a contract, tracking every single step all the way through closing the deal, right? So that if I could hand someone that document and they could say, oh, I can take care of this, There's going to be certain people involved in that process that are not just the person, for example, in acquisitions. They'll have to bring them in, loop them in. But point is that you have the ability to have something like this built. So legal documents, that's another thing that we have had some, when you look at your line items of your business income and your expenses, you always want to make your processes to where you're reducing your expense and increasing income. Again, that's also something we do on our property level, our property level business analysis of processes. But this is just in general, right? So in general, we noticed our legal fees were very high. And so we've even created a legal fee standard operating procedure. So if one of my associates or myself are engaging somebody, we understand, okay, here's how many billable hours per week we're going to cap you at. Here's the maximum rate we're willing to pay. Here's what would happen if it goes to this phase. Like, for example, if we go to trial, here's what the fee is going to look like at that point in time. Here's the maximum allowable of having a senior associate speak on my behalf. Anything from how they account for their time, what kind of software they use. I want access to the software to see their billing. I want to report a billing weekly. I mean, I have the whole thing. I've just been through enough BS, right? So if you have a process and you have boundaries, then you can teach other people how to treat you. So that was one big one for us, because again, we wanted to control our expenses and increase income. Another big thing was asset management, and then also property management. We needed to make sure that we could hand the property manager what to do, what bottlenecks and problems they're constantly needing to keep their eyes vigilant on. And then when they find a bottleneck, boom, turn it back over to the asset manager. Then that person's job is to fix or get rid of the bottleneck. So marketing was another piece. Usually in every business, there's typically marketing slash advertising. And you have systems, usually tech systems, technology. So sometimes you'll have an IT director. That could be another process that you have here. You could have a web development team. We had that, or have that. We also, you could have, let's see, people. So for example, the hiring itself has its own process. We have one of those as well. And all of these different SOPs are tracked in a different project management software. So we use Trello. You can use whatever you want, but you need a place to track all of the things that are going back and forth when you're actually in some kind of a deal or in some kind of a project, right? And then also, moreover, and I'll cover this later, your tech stack, it's important to have something that you're not going to outgrow and outprice, because that did happen to us. But essentially what you want to do is you want to make sure that you have the ability to scale, right, with all of the things that you're using. But each of these processes that you're using, even accounting, so I'll just go through ours, and then your own business has its own. You got to do an audit by spending, again, like I have a long legal pad, and essentially each day when I'm doing things, I'm writing down what I'm doing for 2 weeks. And even quarterly, because sometimes we, don't do deals that often, acquisitions, so even annually. But key processes. So financial tracking and filing taxes, that is a huge thing for us. Also, it's not just taxing, filing the taxes and tracking. It's also having meetings with our tax team, so that we're able to figure out how to plan ahead of time. What are our goals for the year? What do we want to do with our income? How do we want to structure how we're paying W-2 salaries, or what, do we want to do with our planning, the year ahead? Here's another thing, is that is also, so every business has tax, right? So they have tracking. We would do that quarterly. We would have a SOP for our CFO, and she knew that she had certain goals that we wanted to hit each quarter. For our financials, a big one of mine was paying under a certain percent tax. This is just a big thing of mine. But doing it legally, right? And then also, for example, this business that you're listening to now, this is our operating company. So this is where the partners are all located in. And then each new asset is its own separate business. So each business has a combination of these, not all of these. So for example, our marketing, each asset is going to have its own marketing plan and execution that it has to go through to bring in residents, right? And that's separate from our business, where our job for the most part is to bring in 1031 exchanges. That's something that we do. Everyone does their own things differently. Some people are looking for JV partners. We're not. We look for, like I said, 1031s or tenants in common. We're looking for investors that are looking to passively invest. We're looking for other partners that are good at, like a fund, for example, that could partner with us and bring in more funds to our deals. And it's like a co-GP, not JV, but similar co-GP. So anyway, point is that part of marketing, this is for the operating company, you'd have a second set of this for each operating company that you have. So for example, if you have one, I don't know, insurance firm, and then for example, you open up a couple umbrella companies that are underneath the insurance firm, something maybe for education, something maybe for products and services that are associated with, so maybe something that you don't carry under loss protection. I'm just coming up with ideas, but essentially a business might have, a brokerage of sorts that's also underneath the large insurance company, just for an example. So each of those companies has to have a different set of these SOPs. So for us, underwriting is a big process. You want to make sure that the whole team understands what we're doing. Part of that as well, not just the underwriting, is understanding what our metrics are, where they come from. Our assumptions is what we call them. So it's just ours. Again, tech. So we had portals for investors under the tech stack. Tech also, like I mentioned, is wide for us because we also have websites. We have a web developer. We also have a crowdfunding portal, which is another piece of tech. We also have our CRM, customer resource management. So again, we're tracking all of our leads, and I can show you that in a minute with ActiveCampaign. Because that was the one that we ended up having to go to after having to pay like $5,000 to migrate everything over out of MailChimp because it couldn't keep up with our growth. And that's something I want to bring up to you, so it just makes sense. So you also want to do an analysis on your tech stack with your tech team. And there's some advisors out there that I can recommend for you that can ask you what your goals are and evaluate everything that's available and figure out what connections or APIs are available so that they can talk to each other, because that's a big bottleneck you'll run into later, where you have all these different processes and a different person in charge. As you can see, you assign it to each person that's in charge of that process. However, maybe this person that's raising money for investors also has to talk to the person. So investor relations also has to talk to the person who is in acquisitions to let them know how's funding going, to have the person in our accounting department talk to the bank and let them know if we're funded. There's so many different branches to that, but essentially they all talk to each other. So it's important also to be able to make sure that as much as possible, all of your tech devices and apps and things that you're using are all able to connect with each other and able to talk to each other. So we had 10 different tech stack pieces at one point. Now we have 3, and they talk to each other. So that was something that, again, later on, 5 years in, we figured out, but it was so expensive to figure that out later, to migrate everything over, and we still lost a bunch of data. So, we have like 21,000 contacts still, but just do that up front, because it just saves you the pain of all the work that you're doing to make your customer list or your email list, because that's really a great form of marketing that's free. Again, so I know you can't read this, but construction management is a large SOP for us. So that is something that we have built an SOP for. If any of these are interesting to you and you want to check out ours, I don't mind sharing. If you're a subscribed member, or if you're not, then you can go ahead and pay for the SOP, because it takes weeks of time to put these together and tons of interviews of individuals to get all the information out of our heads and into a document, and then they're still living documents. So a conference and an event. So for example, we come up with how many of these we want to do personally we're putting on. So whether it's a mini conference, whether it's a meetup, whether it's a large conference, or whether it is the fact that we are contributing as a sponsor or a speaker, or we are participating, advertising our business in events, what does that look like? What are we to do when that happens? And then we have other educational events for Women Who Invest Council. That is something that is specific to just women who are investing. So it's not like a conference could be like everybody. So anyway, point is that those all have to have their own individual processes. So what we tend to do is we give it a shot and essentially keep track of everything in the project board. And then once we finish it and complete it successfully, then I go back and I essentially read through everything that happened, where it should have happened, and create a process by verbally recording myself with a company. We use Rocket Station, and what they'll do is they'll take notes while they're recording you and transcribing what you're saying. And you can do this with everybody that is in that process on that team. You can have 5 of you on the same call and going through, and sometimes it takes 2 calls, 3 calls, but essentially then you do have to go back and edit everything to make sure that, like, to someone who's like a baby, you always want to talk to someone as if they knew nothing about what you do, and then make it so simple that there's links in there. They know where to find tools, where to go to get things and examples, pictures, etc. So I'll show you an SOP in a minute, but essentially IT, like I mentioned, working through an agile process. So we had a separate person working through development of new websites, new portals. We actually ended up taking cryptocurrency, and so we created a place to do that on our website. And then you usually have an HR department or onboarding / hiring. The CEO or COO, for the most part, are the two people that typically are the ones that make the hiring decisions. Usually it's the CEO that hires and the COO that fires. Not always, you can have your visionary integrator combination, however you want. That terminology I just used comes from the book Traction, which is amazing, and it follows all this. And then also it comes from the book Rocket Fuel. Same thing. If you want to figure out like where your butt fits in all the seats, that will help you figure that out. So blogs, messages, articles, magazines, media, anything that has to do with advertising, banners, stuff for conferences. I can go on forever. Media, essentially, then you have people for that, and there's going to be a process for posting those, making sure they're grammatically correct, making sure they go through a checkpoint process before they get published online. So those are a lot of our SOPs. I think we have more at this point, but every business, you've got to like define these, right? So again, this tool is called a 1-year strategic plan, OYSP. So again, this is available on the Gazelle's website as a free download. And again, if you want the actual PDF version, I think you can subscribe or pay for something. So let's keep going. So this is part of these tools to know what you're doing. Now, we can't read this because it's sideways, but this is something that we talk about on a regular basis, at least annually. So we want to look at what are the trends that we're seeing in our market that we want to deal with. And I let every person on the team, pipe up and tell me what they see. Everyone has a voice, strengths and core competencies. That's something that we can talk about, what we're good at. We are very good at a big, hairy, audacious goal, $1 billion invested by foreign with women by 2030. We're very good at having SOPs and working on processes. That is something a lot of businesses don't have. Our pitch is really good. So the team will tell you that. We want to be on board with everybody participating with this at least once a year. Weaknesses is an opportunity to be very transparent. So this will tie into what is your mission, vision, values, right? So if you have this discussion with your team, maybe even before you start a business, right? First, you want to see this happen, and then you want to see the data, or vice versa, it doesn't matter. And so I'll tell you what that means. So for example, trends, that helps you identify where do we want to go with this? What's growing, what's dying, right? Let's go in the growth direction. Strengths. So what are we doing right now that we're really good at? So for example, if we were like a small startup and we did 2 things and we did one of them well, great. Focus on the one that we do well. And then working on the weaknesses, it's good to make sure that we're not focused on those weaknesses. Maybe we can pick one that we can work on at a time, but not to just go ham trying to, pick those apart. You want to focus more on your strengths. So when we talk through strategy, this kind of comes back to, it comes back to your mission, vision, values. So again, you're looking at your purpose and your why, and it's very clear. This is something, again, part of this, it's the OPSP, the 1-page strategic plan. This is something we do annually. So when you're clear on what your purpose is, so we want to empower women financially through commercial apartment real estate, create $1 billion invested by foreign with women. So then you kind of work backwards. So I know you can't see the values here. I can show you in our Trello board, but we have it in a place. We use EOS. So when you use Trello, you don't have to, but EOS is that part of that traction system. EOS is a way that you can essentially figure out right butts, right seat, people in the right place, make sure they're all clear on what they're doing. And so we have mission, vision, values, what we should do and shouldn't do defined. And I can show you that in Trello in a minute, but essentially your purpose needs to be defined. And then you've got a 3 to 5 year target on what you want. Like that's why we say 2030 is our target, right? So we started this in 2020, naming that and gave ourselves a 10-year runway to achieve that goal. So this is something that you want to go through. This is not great, but normally this is filled out, and I have it in Trello with your chief financial officer, with whoever is in charge of your finances with the company. And so you want to go through this with them at least once a year. We did it quarterly on our team. And so what you want to be very aware of is kind of what you're working with and what's not going well. So this will show you right here. Okay, here's our year ending of last year, what we did, or goals of what we would when we would hit all these starts at this date, for example. So we want to look at we did quarterly revenue, profits, market cap, gross margin, cash, AR days, invoice days, and revenue. revenue. So essentially you want to know all of this, right? And so then you can track over time, how is this doing? So there's also a thing called a business intelligence dashboard that can track all these key metrics in it. So you can either create one, or we use one called DataBox that integrates with other places that might carry this information. So if I'm carrying this information in QuickBooks and I want to track it on a nice graph in DataBox, for example, there's many other tools out there. But then I would want to integrate that with QuickBooks and then be able to just boom, pop up this information that I don't even have to have a call with my CFO. She's already putting it in to QuickBooks. Just an example. So then we always want to know, if we're talking about this, quarterly is what we're doing, what our sandbox is, like who are we playing with? If you're in a large beach, for example, look at this visualization. If you're on a huge beach in Miami and there's hundreds of thousands of people, that is your audience. Or you could have a small sandbox and there's 4 people in there. So you're able to capture the people that are in your smaller sandbox easier because there's less chaos to pick from, basically. So we want to define what's in our sandbox. So for us, it's women. We're looking for people with retirement accounts and she-vestors, so women who already invest. That's just to uber simplify it. Then we also talk as a team about our actions. So what are we going to be doing to live out those values, purposes, and to get to our big, hairy, audacious goal? So for us, we built an app, we built an ecosystem that hosted women all the way from bad credit up to becoming a deal sponsor. Crowdfunding to be able to help women invest with 1/10 of what they normally have to get into this kind of investment. We wanted to help women with a credit program so that you could always feel like you're not intimidated, no matter what financial literacy phase you're at. A fund for renters who own equity in our buildings. It doesn't mean all this is going to come to fruition, and 4 out of 5 did for us. But anyway, and again, BHAG is your big, hairy, audacious goal. So you can see that 1 billion she-vestors by 2030. Key thrusts and capabilities, it is just what it says it is. So essentially, to achieve 1 through 5 over here, what action do we have to take? Okay, so I had to open up a crowd fund, for example, right? And it was going to have to raise this much money. To get to number 2, we are going to have to automate a whole bunch of our different products that we had. So that was number 2. We needed a development team. So essentially, what are our key things that we have to do, thrusts, and then key initiatives. So essentially putting a number on, like I mentioned before, the crowd fund. Okay, we need to then use that to acquire this much of real estate. The full fund amount would look like this. Whenever we make an app for a place to invest, what is our goal there? Oh, we want 100,000 she-vestors that are using the app. So anyway, we just have this all defined. And so profit per X, again, this is another defining moment of what is our KPI or key performance indicator: profit per month, profit per year, profit per employee, profit per, how do we want to track like where our profit is coming from? I would say that I really do like the metric of profit per employee, because again, it just sparks the conversation about, is that role necessary? Because especially when you're growing a team, you want to make sure that everybody is somehow, if you look in your financials and you look at your financial statement, each line item is created or added to by somebody that is directly working in the business, right? If not, then that role, at least when you're a startup, does not need to exist, or can be outsourced, but mostly doesn't need to exist. So I like profit per employee. And then if we bring this up and talk about it, then everybody's accountable to what is your contribution to that. So if we're able to track per Sally, per Mark, per Kaylee, per person, then it's also really clear to them that when this number shows up in the business intelligence dashboard, that, hey, you're producing this. And so those that are not doing well, they want to step up, because you're using positive peer pressure to put that in front of everyone. Just sometimes you don't have to talk about it. You just put it out there and you're saying, hey, here's what everyone's doing. And you don't have to say anything. And so those that are self-motivated, they'll also show up then too. So it just really helps those that are motivated by their own efforts to be able to move forward with stepping up to the plate, if you will. And those that don't step up to the plate, that's also a good defining moment to realize who's not going to be a team player on your team. Okay, so I can show you in a minute our mission, vision, values, but essentially that's something you've got to define. So I have this put into like a prettier version in Trello. But again, this is started somewhere, and again, you can see that we talk about strengths and weaknesses, core competencies. And so what are your productivity drivers, right? And so for us, it's a defining set of criteria that's different for every business. So for us to close a deal, so every deal is different, like whether it is I closed an insurance client, or I was able to buy a racehorse, whatever it is that gets you to that point, we have to track it. So for us, it was, here's our number of deals that we want to hit, and here's how many doors we want to hit. So therefore, after using the 10% sales rule, how many LOIs do we have to, letters of intent do we have to send out, or offers do we have to send out a week to quality deals? And then what does our close ratio have to look like? And then also, not only are we making buying, so what are we producing that gets us to our end KPI? So we buy deals, essentially, is what we do. So we have to make, in our case, this many LOIs, we have to make this many deals, etc., to get to our goal. So for example, for us, what we sell is securities. So we sell shares of our company to investors, and then we also have the ability for affiliates to be a part of our ecosystem. So those that have a corresponding program that essentially would help an investor in whatever stage of life cycle they're in to get educated to the next phase, and eventually funnel them to fundraise for us. So that was part of it. So investors want to be educated. Once they're educated, they're good investors. How do we do that? So we do that through affiliates, meaning that we have other education companies we partner with to funnel investors in when they're ready. We have software, we have a book, we have an SOP for 1031 exchanges, we have a conference, we have a couple of different things that essentially we have to sell these things to be able to drive more money in, which would help us to make and buy what we need to hit our goals for the year. And okay, so what do we need to do in record keeping, right? What do we need to keep our eyeballs on top line? Because you've got to have key objectives whenever you're driving towards a goal. If you don't have, say 5 to 9, and you have like I used to have 50, it's impossible for anyone to stay motivated because you need to keep your eye on the ball, right? So this is just an example of if I was telling my CFO, hey, we really need to pay attention to our CCC, which is our cash conversion cycle. We want to keep it under 18 days. And so that means that our affiliates would have to be invoiced like this. Or what I actually did was I solved this problem and made it to where there were no AR days. So we didn't have to wait on any accounts receivable. We just were able to figure out a way to use a software, which I can talk to you about. It's called ThriveCart, to host all of our sales products and programs and education courses. And it's a one-time fee. You don't have to keep paying every month like ClickFunnels. And essentially, and you have your affiliates in there too. And essentially that takes care of it to where when the money comes in, it just gets split at that point in time with those other affiliates you have. And there's no invoicing at the end of the month. It's just they already receive it and there's an accounting of it. So for example, what does our timely letter of intent look like? How many days do we get in a cycle to know when a letter of intent needs to be sent in? Like, for example, if someone's working on a deal and then they need to track their deal all the way through making an offer, how do they know what is a timely letter of intent delivery, right? So that needs to be in there. And then also our property manager financials, when those are timely delivered, and then recorded as well. So each business has a different record keeping thing that's really important to them, or record keeping metrics that are important to them, but this is just some of ours. So for example, we wanted to talk about our budget, and I think weekly is a little obsessive. We ended up doing our budget tracking monthly. But when you do your budget, you got to do an annualized budget, and then you typically, in this for every business, annualized budget based on the market and based on what you went into the deal knowing in your business plan, and then you do short-term budgets based on, depending on something that's up and coming, that you need to do a raise, you need to buy an asset, you need to do certain things. And so you want to make sure that your budget is in alignment with whatever those goals that are coming up short-term are. So again, this is going back to that thing you saw on the other page, these actions. I believe that was up here, the goals. So that transfers down here. Now we're talking about, okay, what is our theme? So if we were talking to our company and we're saying, hey, we want to, so for us, we wanted 130 letters of intent submitted. And then what we wanted to do was then design an LOI party when we met that goal, right? And so You want a scoreboard to keep track of all of this. So also to be able to get to these letters of intent, we knew that we were going to have other activities before we could just write offers, right? So we were going to have broker meetings. We were going to have to take tours. We're going to have to underwrite so many different deals. We're going to have so many calls with brokers, meetings with brokers. All right, so that there's activities that happen before, right? So you need to know each person, like what are the KPIs that must happen to drive to this measurable target for the quarter or annual, whatever your theme is for. And so, for example, a rock is something, and I'll show you in the EOS board that we pick up and we run with it. So there's usually like 5 or so quarterly rocks that we run with. And so we had our own here with a new fund. We wanted a certain amount of investors qualified per day on average. We wanted a certain amount of income per month coming in from affiliates. We wanted to make certain hires on the team. We wanted to have certain technology implemented into our business to make it more secure. And we wanted certain partnerships to be able to know that we are going to grow our presence and our ability to meet these other bigger goals in the future. So also then you take these quarterly priorities and you essentially order them, and then you give them a due date when they're due by. And so what I do is I take these and I put them again in that board. I'll show you Trello, where underneath your quarterly rocks, I've got these quarterly priorities in order, and I put a number on it, and then basically I put a due date on it, and it's assigned to somebody, so they know that. And then if there's milestones, for example, inside that project card, you can also create more deadlines and milestones under a checklist. So, and then also, what makes up all this stuff? Again, I talked about what does that celebration look like once we meet this goal. So for example, what are our critical numbers that we have to meet, or critical people that we need to, sorry. Oh, these are all critical numbers. Got it. So critical number with your processes, critical number with your people. Oh, so I guess we could just have 2 going. So we could have 2 different, oh, what does it look like to be above your critical number? And then what does it look like to reach that reward? So we just defined it here. I know my handwriting is wonderful, but essentially, so for our P&L to grow and be where it is, profit and loss statement, we needed 5 deals in this year. So basically, if we hit 4 deals, we were doing okay. If we did less than 4 deals, then we're in the red with 3 deals. So this is just our metric. Then, for example, if we are underwriting, that was one of our processes of things that we needed to do. And so if we were under basically 400 underwrites, then we were in trouble. If we were under, that's a big gap there. If we were over 500 investor calls in a year, then we were, is this quarterly? I think we're doing quarterly. No, that's a year. If we were doing this in a year, above 300, we're doing okay with investor calls. If we wanted to make a certain amount of investments, that means coming in from investors in this case. So if we were underneath 40 investments from investors, then we're in the red zone and we're not doing well. So you just want to know, like, where is your tolerance for when we're succeeding and when we're not. And this is kind of how you start drilling down your KPIs. So if a key performance indicator for you is the number of investors you're bringing in, your KPI would be, I don't know what the number here would be above. So basically it'd be anything over 40, right? Anything over 40 investors, you would meet your key performance indicator. And then you could even set up something where your key performance indicators, key performance indicators would even define what a bonus looks like and when. So cash, this is really important to talk to your CFO about this. So they're going to be talking a little bit about what this all means. And so she defined this for us because, again, I'm not the expert in figuring out how do we accelerate our cash, right? So our CFO would come up with ways that we could do this better, right? She would look at where we're at and say, for example, these are just examples she came up with. She wanted to make sure that we had a dedicated person that was identifying the most attractive deals so that we knew attractive in this sense meant that we could make the most profit off of them. And then also now we have a new criteria that they're also not incredibly risk carrying with the amount of vintage, we call it, or the age of the building. So basically we wanted to find out what the most attractive deals are. We need one person doing that. If we're able to do that, then we can focus on taking that one down versus trying everything. So that obviously would increase our cash because we find more profitable deals that work for us that we can have success with. Having trusting people to close the deal. So essentially that's having someone on the team that would be able to just do the closing process on the deal. So that would be somebody that would make sure that we're guaranteed to close the deal, right? And so then that means that we're guaranteed to make profit. So how do we improve our production and inventory cycle? Everyone has a different product, right? So whether it's for us doing deals and producing income for investors, selling shares, really doing deals, or whether it's someone that's producing a product. So for us, to make sure that we can improve our cycle, we wanted to have efficient property management teams in place. So those that meet the KPIs that they are assigned. For funding, we want to have a team to identify the most, that was phrased incorrectly. We want the investors that basically can invest the most, and they basically are like a 5 out of 5. I want to invest now. They have a need. So you want to make sure that you have, for us, it's investor relations to identify those investors. We want to have a business-minded marketing team to attract identified investors. And promising the best possible ROI, not necessarily promising, but being able to offer. And then identifying and applying the most valuable. So you want to think through all these things, essentially, like what can we do to make sure that we improve our sales cycle so we close and it's guaranteed, and then also that we're making sure that we're getting the best deals and focusing on those only. Your market production inventory cycle, so whether it's an inventory or whether it's for us, it's investments that we're selling. So we want to have a dedicated person to each part of that process. Your delivery cycle, depending on what you're actually producing or sending investors, it may or may not apply. But so for us, usually the typical cycle is buying and closing a deal, and that timeline is identified in our original documents and contracts. And so it kind of is what it is. The only best thing we could do is basically have the best due diligence teams, etc. So you want to just go through what is it going to take for you to shorten your delivery cycle, which for us would be when we get investors cash, right? So maybe that means that we can buy assets that are already cash flowing, and we're not going to do heavy value add so we don't lose the residents in between. Maybe that means that we hire a more efficient contracting company that we actually have control over, and we actually have a warehouse that stocks supplies, so we don't have any bottlenecks when it comes to supply demand or supply chain issues. So each business has its own. So you want to look at your delivery cycle. And for us, our delivery is a return to investors. So there's a couple different ways to do that, whether it's efficiencies, whether it's discounts on buying in bulk and economies of scale, or whether that is doing something to make sure that you're investing in a different kind of asset that doesn't have as much risk. And so you're able to make less money, but more consistently. And so it ends up being the same return, So there's different ways to do this. Again, billing and payment cycle. So automation of billing through digital tools. So we did that with cryptocurrency. We did that again with Stripe. We use that for payment for all of our events. So boom, boom, it's done. Then when it comes to any kind of, sometimes you can pay through QR codes, again, automation. If we have our QuickBooks set up to where it auto pays certain bills on time, again, great way to do it. And then, like I mentioned already, if you are offering products online and you want to split affiliate commissions with other people or have your products paid for, there's a way we use ThriveCart to be able to essentially set up automations where if someone else brings in a lead and they're an affiliate and they're set up in the system, they use their code, and then the split of the funds go out immediately. There's no reason, again, to do any AR, AP, accountancy, asking or sending invoices at the end of the month, none of that. And so you just want to get rid of those bottlenecks. Again, automatic reminders for clients. It can be set up in your billing and payments. So like, for example, for us investors that start the process of investing and they don't finish, automated reminders. So anyway, every business is different. Cash. So this is, you want to know your cash position. This is, again, another conversation to have with your CFO or financial professional on your team. But essentially we want to know what our net cash flow is. And so these are real examples of our business at a certain point in time. In your EBITDA or EBIT, you want to know what your business is valued at, right? So beautiful, valuation there. And again, what you would like to make over the next year so that when we have this conversation again, that we can track how we're doing. You can shorten that cycle and have this conversation every 6 months. It's up to you. But essentially, these were our goals in increasing our volume of returns, reducing our overhead. So again, reducing expense, reducing our debtor days. Again, we were trying to get it to 0. And we don't do stock. And so again, this is different for every business, but you put your goals here. And again, this is all about looking at this annually. This is not complete on here. This is something that I do on my own. And this is something that you should have everybody on your team do for themselves once a year, and then compare how it is for next year. So it's a 1-page personal plan, OPPP. And again, this template is available on gazelles.com. And so essentially what you're doing is you're looking at your areas of your life, your finance, your fitness, your friends, your family, your faith, and looking at what your activities look like 90 days, 1 year, 10 to 25 years. The 10 to 25 year goals, I actually had to talk to my grandma about this to see like what actually is achievable and what works. Because sometimes when you set goals out that long, you have this idealistic view of what you want, but then you haven't actually lived it yet. And maybe you haven't gotten smart and found people that have also lived it, because those are the people to ask, how does this work? Does this actually work? Is this a great lifestyle? Are you happy? So this is more of a personal thing for each person on the team. Your 7 strata. And again, you do not have to do this one, but it's again, defining your brand promises and your sandbox. We kind of covered that earlier. For us, we had our whole team kind of go through this. What were our brand promises? What do we want people to come away knowing that we were going to give them? So for us, we wanted financially literate women investors. We wanted to help women or help those that invest with a 1031 to 3 times their net worth. We want really 2x, their net worth. We wanted more ease and access to invest. We wanted to use online portals and have staff that would help to onboard your investments. We wanted a safe space to invest together. So again, that's what our Women Who Invest Council is to make sure that we're able to discuss common challenges that women deal with that are very sensitive sometimes. Like, I don't know if you've ever been harassed or stalked, or if you're trying to figure out how to deal with having kids or menopause or revenge porn, or if you've ever, there's a million things that women go through that are different. And so we needed a safe space to be able to share that and get through it together. And then also we wanted to have a revenue share. So what we do is whenever any agents on our ecosystem team sell anything, everybody else in the same realtor ecosystem also gets a split of those fees. So it's more passive income. And then you want to go through your 1 phrase strategy. What is your why? Differentiating activities. What do you do that makes you different? So for us, it was cryptocurrency. It was accepting grants. It was working on your mentors, not being male, giving you the ability to have women mentors to solve those problems that they've made it through when you're dealing with investing, because it's very stressful and it's very different. You've got to have the right people in your corner. And then also reducing the investment minimum. What are our 10x factors? And again, our profit per employee is our favorite one. I know this is upside down, but these are 2 things mashed together. So this is the VTO, the vision tracker organizer. Sorry, this is upside down. If you want to copy this, I'm happy to share. But essentially you have a 1-year plan. You have your rocks, again, quarterly rocks that you pick up, and you have your issues list. So IDS that we discussed. So we have an IDS meeting, or we did once a month for 90 minutes, where everyone can basically in a safe place, in our Trello board, we would put all your issues, like that person talks too much, that person, we don't make any money, like this, whatever their problem is, we don't complain about it until that meeting. Then everybody has the ability to take this list or their own list that they've added to the Trello board essentially, and then go through, I have an issue with this, or this is how we phrase it, I will be solved when blah. So whenever X happens or is fixed, and then we get to talk about it as a team to try to find a solution together. So this is also available again through the EOS model. So that's available through EOS Traction System, their website. So we use this, and then again, this is in the Trello board. So our core values again are tracked here. I really just have this in the Trello board. And then this is from a meeting that I did with EOS. There's a group in Dallas, or through Scaling Up, excuse me. And so essentially this is who, what, when. So if you, and that's kind of going back to our processes. For us, our what's are our processes, and then basically our who's or who's assigned to it. And when this is a cadence that gets set up, we have it in Trello board, by month or quarter, etc. So that is kind of an overview of these traction tools. And again, that's through two different systems, the EOS system, and then also the top one here is Gazelle's, it's on the Gazelle's website, Scaling Up. So we're talking about that. And so I'm going to exit off of this and go very quickly to my Trello board and show you guys what I'm talking about when I have created places that all our stuff lives in, right? And so for me, this is our team that I'm going to show you. So what we're doing, and we're going to have to do a second session here because I'm not even through not even 2 standard operating procedures, but anyway, so what we've done is we've figured out what are our SOPs, our big things we do. So we're money raising, we're doing acquisitions, we have a weekly accountability. So we do EOS, and you can actually look up a free board template called EOS and customize it to yourself. We have a internal team that we do every other day huddles with. So for example, if we're producing magazines, if we are looking to meet a fundraising goal, if we are like, what are we doing for the day? And all the A players just step up in that meeting. It's 10 minutes long, and they say, I'm doing this, 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 this. And if they need help, we have a venue to do that. We do it in a group chat. And then also, because everyone needs to be asking each other for help. Most of us can help each other. And then after they've asked the group and they can't get help, then we also have a place, we use Voxer to be able to message myself or the project manager directly so that they can actually ask them for their specific issue that hasn't been solved by the whole team. We look to go for grants, awards, and then also loans. We have a development team as well. So that's another process we're tracking. We have hiring and recruiting. So this is something that I'll just kind of pop in right here. So whenever someone is onboarded or whenever we're hiring on the back end, we're tracking the process of our hires and how's it going. So for example, this isn't the best background, I got to fix it, but if you have KPIs for job descriptions, we have them listed here. If we're making a post to hire someone, we would copy this right here. It's usually the body because it goes through our mission, vision, values, and explains how important these are and what kind of candidate that would be in alignment with our business. Then we would add our applicants here. We'd use labels to categorize the candidate by their department. When new applicants come in, we put them here. When the interview is complete, you get the idea, but this is something that you can copy. And so then once someone is hired, then they need to know, like, what am I doing? I have no idea, right? So they need to know when they start, the day they start, what they're going to be setting up. So Trello and Active Campaign we use. I don't want to go through all these, but essentially the day they start, they know what to do. A new employee needs to read these in their first week. And so like I mentioned earlier, you want to have a scaled team. So this was ours before we changed everything. But essentially they need to know who does what on the team. And if they have, like you can see the cross lines here, pretty much everyone down here cross departmentally, they can connect with each other. And that's the idea, is that when someone needs help, they know who to reach out to. So essentially in here, you'll have your sick leave policy, vacation policy, sexual harassment, company overview, like everything for the new employee to look at. And you don't have to use Trello, but I really like it. So this is just one place. I have books that I have everyone read that are pretty short. And especially when they're on the team, mandatory reading, logins that they're going to need, two-factor authentication, what we consider secure information and how to handle the secure information, brand book, where to post your issues that you have. Again, the IDS meeting that you have, issues, decision, solutions, parental leave. I mean, it's going through what's up, when you come on the team. And again, this is reiterating what our traction, mission, vision, values are. So you can see our core focus, our core values here. And this is something that we reiterate on our quarterly calls, performance calls with everybody, where they fit in. Again, reiterating the team structure, how to communicate with the development team, because they're a very special set of people. Here's the staff contact list. I mean, they want to know where to go, right? So that's one of our processes, is hiring and then onboarding. We have a summit. That's one of our processes. SEO ads, marketing. That's another process. We have a Women Who Invest Council. That is another big part of our processes. So I'm just going to take you in here because we talked about our mission, vision, values. Because I'm going to have to go through so much next session, this will be process or scaling part 2. We're just going to hit in here. This is our weekly team meetings that we have based on EOS. Like I showed you all of those metrics earlier, that stuff gets loaded in here to track how we're doing. And then I track in Trello. I don't know why these are faded out. Sorry. But I track in Trello in something like this. Like you can do Blue Cat reports where they can actually track everything that you're doing. And essentially, if you want to create a report, I don't want to make it right in front of you, but essentially what you're doing is you're picking key performance indicators that you are tracking. So we have a mission, vision, values right here in the VTO, a vision traction organizer. So when we were bringing on people on this team to come in that we hadn't yet built a process for, this was a person that was missing that we noticed. So ops or COO that we needed. So every time we had something for this person, we'd move it over there. And I was fractionally putting that out into the universe to a company called Nourish and Sow. They're awesome. But until we had somebody, they were fractionally doing it. So for every meeting we had a place to track our scorecard. So basically how we're doing, but we ended up turning this into a I'll show you the manual version of it. We ended up, this is an OKR. So this is something that, hey, everyone is clear on the mission, vision, values. They're clear when they're hired. They're clear when they come on board, where to go, who to contact, all the policies, what to do. And then objectives and key results are basically a way to track where we are with our key objectives. So for example, you can't see this, but so for example, we have our North Star. So again, we're $1 billion invested by Forward with Women. Our North Star goal, our goal for the year, our goal by the end of Q4. And essentially you have your key KPIs, your key performance indicators that are going to get you to that BHAG or Big Hairy Audacious goal. So we were tracking 10 KPIs at a time that got us to $1 billion invested by Forward with Women. For us, that was grants or applications, so we could scale our business and bring in the right staff members. We wanted to make sure that we knew that our event surveys were getting to at least 50% of the investors and that they were level 10 events. Because the more investors that come, they enjoy the events, they're going to invest because they know, like, and trust us. Letter of intent goal. So we're submitting offers, broker meetings in person, the amount of funds that we've raised, soft and hard. I mean, we just basically are tracking what our KPIs are. So here's what to do with those KPIs. So you're like, oh, KPI number one, I'll make sure I say this right. So key performance indicator. Oh, so you break down to key objectives, right? So you have your goals we have to hit, and then it's like, well, how do I get there? I don't know. So if my goal was to get $5 million in our crowd fund, which is part of our soft funds raised goal, right? Our goal was so then you want to make a measurable. You want to break it down into multiple steps. So here, to fill in that, it took us 1, 2, 3, 4, 5 steps to be able to know what it was going to take to get that raised, right? So our first one was defining the archetype of the type of investor we'd be reaching out to, our customer voice, we have that defined. We wanted to reach out to these potential investors in and out of the company, and we want to have this many calls per week. We want to make sure that we're speaking at a conference or a group event at least once a month for these dates or throughout these dates. We want to meet with 5 investors per week, one-on-one in person Zoom or in person. And then we wanted to spend at least less than 6% of our profit on marketing to investors. So those were our broken down steps, 5 steps to be able to get to raising $5 million in our crowd fund. So then there's sub steps to each of these. For example, if you're spending marketing dollars, like I mentioned earlier, you want to make sure that you're looking at the traction channels. There's 18 of them. So let's cover that next time. That essentially show you what are all the possible places to put your message out there and get it in front of people. And then basically how to bullseye test with, $10 here, $10 there, once a week, etc., till you figure out what is the best top producing source for you. Get rid of the rest and keep the one that's working, because then you can track your ROI right away. And then you'll make more money than you're spending on the marketing. And that's the idea. For us, our goal was, this is industry average for us, spending less than 6% of our profit overall on customer acquisition cost, or CAC, CAC. So I am going to stop this session there because I know it's a lot and it's been over an hour. And so this is session number 1 on scaling, tools and things that you need to do so, and understanding the concept. Next time we will cover more tools that we're using, and essentially how to make it super clear with everybody. Okay, guys, we are onboarding you to the team. Next, guys, we are working with making sure we're clear on our mission, vision, values. Next, we're having meetings. In the meetings, we have a certain cadence that they run that look like this. The scorecard was what I was going through, is what is our objectives and key results that we're tracking right now, and how is it going with everybody. We now have turned that into a business intelligence dashboard, intelligent dashboard that is on data box, and there's so many other tools that you can use, but essentially what that does is it has an API that hooks up with another software that actually is holding this information. So it's not going to hook up to Excel spreadsheets like we had there, but we have the same data now in ActiveCampaign, and those two talk to each other. So we're able to monitor all of our scorecards, that items that we're tracking. We want to cover headlines, to-do list, issues. In this IDS meeting, we only have that once a month. So basically the meetings are 30 minutes, and then they're 90 minutes once a month, because we'll throw in the IDS, or issues, decision, solutions meeting. So once everybody's clear on what is our vision, what are our goals to hit, what are our key performance indicators, then basically, again, like I mentioned before, you take your rocks that were underneath that, the broken down category to get to your OKR, objective and key result, and you turn it into a rock. And so I had these organized by, which number of priority we wanted. So we wanted to achieve $20,000 in grants and $2 million in loans. We put a date on it. We gave it to a person, and that was our number 1 goal that we were going to achieve within a quarter that we wanted. And that was under one of those objectives that I showed you earlier. Again, this is for marketing. So basically, our LOI goal, we had a, affiliate income goal. We had, basically, we're tracking how we're doing with all those key objectives that we were working with. Again, with our IDS meeting, anyone that had an issue, they just simply make a card in here, and then we discuss it on our 90-minute meeting once a week. If we have things that we need to do, we will put those in here, and the team members that, like, for example, underneath your objective that you need to reach, there might be 1 step 2 or 3 that you need to get done. So you could put that in your to-do list here and attach it to yourself with a date. Once your rocks that we're carrying for the quarter are done, so like we have achieved a lot. So it feels really good to be able to look at, what we've achieved, but you drag it in there. And then sometimes we have these future ideas that we talk about in our issues and decision solutions meeting. We basically will put that in here and then put a future date on it and talk about it next. And then again, on that to-do list, when it's done, that will go over here. So this is basically us tracking how we're doing with our objectives and key results, and being reminded of what's going on with our mission, and values. And so next time, we're going to go over how to create KPIs, or key performance indicators. We're going to share what our key KPIs are for multifamily, because we found that there's a specific few, after I've read many asset management books, that really are key in this business to telling you what is actually working and what's not working, and to keep your eyes on, because there's some KPIs that like cover 3 or 4, but really you just watch one and you can understand the health of all of them. So we've gotten that kind of shrunken down. So next time we'll cover that. We'll cover our CRM. We'll cover how to do advertising, the 18 traction channels, how to do lead and bullseye method to test out, where you're doing well, and a couple more topics. So I look forward to having session number 2. And this has been session number 1, scaling systems, how to, and tools.